All right. So today I want to look at Nasdaq. Nasdaq. I want to start with a weekly chart. I'm doing a top-down analysis on this currency to see the anticipation of what the market is likely to do, the probability of what the market is gonna do at the coming week. So we're on this chart. This is on Nasdaq. As you can see, pretty much the Nasdaq is pretty much in a bullish, in a very strong bullish. Over the past few months, when you look at the monthly candle, now past few months, the Nasdaq was skyrocketing up. So basically, we are in a very strong uptrend. So what I'm gonna do is I'm gonna scale down. I'll be doing analysis on this. I want to scale down to see actually what the market is doing. As you can see, this market structure here, I want to see something. So when I come to the daily, I got this box here. This is the currency. It is what the daily range is. Is the past for the last 20 days. That I want to work under this box. I want to exalt everything in this box to do a price action, because what we're doing here is purely price action. We want to see how the price is reacting to a certain area, to a certain key level, and this and that and everything concerning this. So what I'm going to do after I've marked my zones above the daily, because I want to take the daily, I want to use the daily counting from the first 20 look back period, because we are working under one monthly candle. So in that one monthly candle, we have so much, we have monthly, and then inside the monthly candle, what we have basically is the price. We want to see the behavior and the momentum, change of momentum is that price candle of one on a monthly candle. So what I'm going to do is after I've marked my zones, what I will do, I'll scale down to 4 hours, because 4 hours is a very good, 4 hours in my opinion, 4 hours is very good when doing analysis, when you want to see institutional structures, when you want to see everything related to price action in a very broader view. The 4 hours to me, it's an ideal that it can give you what you can tap, but you can tap it in any time frame. It's okay. The time frame really come down to you. Okay, this what you want. So here I'm on my 4 hour. So until the 4 hours, what I'm anticipating next week is this, because for me, when you look at this math, I want to see what the price is at for now, like from a basic simple term from using Fibonacci. So you can see this is an uptrend. So if this is an uptrend, I want to check my current dealing range where the prices have come, because before that I was anticipating this low, because when we are in an uptrend, when you see let me do something like this, when you put a trend line like this, you see what we do exactly when we are on the higher time frame. It is bullish. So let me zoom in a little bit. So first of all, before I tell you this, my anticipation on this chart was the market is coming to the region of the mean threshold of this low to this low to this high to give us 50% or 61% for us to enter long, and then we were anticipating this high to be violated, of which came to play in place as this. As you can see now, when this when the price traded at the midpoint of this high, if this low to this high, so I want to use now the current low that was mitigated around what, that dealing range. So for me, what is valid now for me to use on the next week when I'm trading, I want to see this now. I want to see now my current dealing range shifted. Let me get this off first. Now my analysis shifted from this low. Now my focus is on this, because this low was violated to be a lower low from this, because it was not broken. So when we're looking at this dealing range from this high, from this low to this high, you find that this price did not trade down. Instead, it came to the midpoint of it, the 50% of it of Fibonacci, then went up and take away what, our previous high, showing that the price is indeed the higher time frame on a monthly perspective is really telling us the market is bullish. Now for the current week, we are here now. My current dealing range, I'm going to shift all my mind I'm not going to use all this. I'm going to shift all my mind from this box now, from this low, this now the fall from this low to the high. So now this is my current dealing range. I want to see what the price is doing at around this region. Now this region is what I'm closely monitoring, because as I know, we still have bigger perspective, institutional perspective down here, a very big long-term demand area. But I'm not looking into that, you know. I'm not looking into that because we're doing intraday trading, because, you know, all these liquidity pools here were being taken by this candle closing below it, showing that, yeah, that's a liquidity grab. We're going up to take the next. So our current dealing range is here. Why am I using this low and not this? Because provided that we have not broken yes this, because my current dealing range was from this low to this high, and then the price traded in the mid threshold of this low to this high. So currently when that happens, I come down here. Now this is my current dealing range from this low to this high. Now I want to see what things, how price will react. Yeah, at first, as simple as it look, what I usually do, I want to know where the price is at the moment. I take my Fibonacci, I draw from this low to this high print, because we are bullish. As you can see, we are above price, we are above 50, so that means the price is overbought. But when price is overbought, we're going to look for intraday short entries, short, but in the long term, we are anticipating from this low to from this high, I mean this high to be violated in the near future. That's our probability. Now what we're looking at here, what we want to do after we have identified where the price is at the moment, this is what I usually do. I usually take a line, I'll take a trend line, then I'll draw my 50 Fibonacci, yes, and then I'm gonna take this Fibonacci. I'm gonna because I know where my entries are. I have already defined my entry just by looking at this chart. Now, if I'm looking at this chart, as you can see, it is bullish, but I've told you that we have intraday short-term bearish. As you can see, I'm gonna sell this. My first objection is gonna be at 38.20, but 38.2, and that's the first objection. Then when I take a first objection, I'm gonna go at the second objection. The second objective is at 50, and then the third objection is actually at 61, where it's gonna trigger me for an entry long, aiming to what, to take out this high, because as you can see, we have lived a very clean zones where the market is likely to come and react on this region. Now what you can see is we have this area here, we have this build up area here, and then you also have this one big candle inefficiency that I know the market is likely to come, and then also I have this low, then I have internal market structure. We have the external, we have this low to this high as my current dealing range, and then we have internal, this low and this high and this low, that is internal structure. And then we have again the internal of this low was broken, the price broke this low, suggesting high price moving. So I'm anticipating for the price to come there. So my anticipation is this: the price is likely to come at 50 to mitigate at 50, and then to climb up a little bit to 38, to come at 50 to mitigate back to have a slightly pullback at 38.2, then to drop to take all this liquidity. We have a build here. We have a liquidity, what we call it, liquidity grab. We have so many liquidities, not so many necessarily, but some liquidity resting above this region. So I'm looking for a price to react. Not necessarily, my probability is this: the price is coming down. Yes, I know the market is bullish, but I'm not gonna just say there and say I'm gonna buy, because you know, when you're dealing with the market, it's not just the entry, it's what defines your strategy. I can say that I can be right that the market is truly in an uptrend, but I'm gonna buy at the wrong time, so I need to enter at predefined entry zones. So I hope you understand it. So after that, I'm gonna have intraday short some shells, but these sales I'm gonna use a small lot size, have a predefined risk management for it to come to my objection or my objective. And if it's bang at my objective, this is what I'm gonna do. I'm gonna enter a buy, and then that buy is my long-term buy. On a long term, I'm gonna hold it for a couple of days, for a couple of days for it until it come and reach it. But you know, this is Nasdaq. We're dealing with Nasdaq. nas100 is one of the best currency for me. It's one of the best indices for me, actually, that can give you good rewards only if you can know how to trade it and you know what you really want. Okay, so after the price come down here, I want to anticipate a long entry, and also I have so many objectives around here. We have number one, we have this void here where I want to see this price coming down to balance this here until this region, because this was internal structure which was violated, and that is what we want to see, the change in momentum. If I'm doing the current dealing of that and that, this is violated. After it been violated, I wanted the price to come, then to go up, to have something like this, and then to come down to take at my optimum trend entry, then to go. Necessarily, it cannot even come back to 60. Okay, I can be expecting for 60, but you know, it is what it is. The price is that the price, you know, nobody can predict what the price is doing. So when you're dealing with something like this, it's like, you know, you're dealing with the, you know. So after that, after identifying what my narrative, my objective on the 4 time frame, I'm gonna scale down for entry to see possible way of how I can enter and how I can be fine. Now, as you can see, when we have this low and then this high in our current dealing range, we have internal structure that we know that the price is likely to respect. As you can hear, we have this low to this high. Now we have this internal high, internal low. You understand? We have this. As the market break this one, so we are anticipating for the price to come and trade at this region. So after it trade at that region, that is what we identify for the coming week. What we want to see is a mitigation from down. We'll have short-term sales to see how the market replaces. But generally, we can see the price is it's pretty much bullish, depending on a long-term high, depending on this low, the current the bigger long-term low and the long-term high. Actually, we're not gonna focus here, because as you can see here, we have an order block, this unmitigated order block where the price is likely to come down there. We're not going to look at that at the moment, but we are going to focus on what is happening next week. What is happening currently next week? As you can see, we closed in a bullish, in a very bullish momentum, suggesting our price, because when we're looking at the 3 weeks on the look back period, we found this and this, the price tend to respect the price of going up. It did not close up, it did not close above this up close candle. So what we're anticipating is, and then this week close with a bearish candlestick. Basically what I'm anticipating is for a manipulation, and then to go to where it wants to go. You know, you cannot predict the market, but you can have probability of the market was likely to do. So after that, we'll be scaling down on another time frame and see what the market is doing, and now playing along and see. But anyway, everything seems to be good. Everything seems to be good, and think, yeah, that is pretty much good. That is pretty much good. This is what we want to see. We want to see a slightly manipulation to 51% or 60% or 38%. When we give it that, we know what the action is. But in the meantime, we'll have a short-term sales and everything until we reach our objective. Actually, when you're trading and then you have your entries on where the price is likely, maybe the price is above 50. What we want to do when we want to do the price is above 50 and it has taken the previous high. So what we need to do, we need to have short-term sales as we are conscious about the general bullish of the market. Even if we were to use a trend line, it can tell us otherwise. You understand? Ne? So we have one touch, we have two touch. Then again, after this has been violated, what am I anticipating? I'm anticipating the price to come and then to touch this touch. When it comes to touch this touch, where we are, take a Fibonacci, draw from this high to this low. You see, we're anticipating at what? 61%, and it can be very good. Confluence, you can use Confluence when trading this. It's very good, but I'm telling you that NASDAQ, when you master trading NASDAQ and everything is gonna be okay, you're gonna understand everything. I hope I've put something across and you understand. That's what it is. Until the next video, Shaya, peace.